So let's talk about one of the most successful and honestly, one of the quietest corporate giants on the entire planet, Berkshire Hathaway. Now, you might not know that name right off the bat, but I can pretty much guarantee you know and probably use its products every single day. We're going to pull back the curtain on this incredible empire. First, just look at this number. Let it sink in. 5.5 million%. That is the insane total return Berkshire Hathaway has given its investors over the last 60 years. It absolutely demolishes the market average. So the question is, how on earth did they pull that off? Well, you really can't tell the story of Berkshire Hathaway without telling the story of this man, Warren Buffett, famously known as the Oracle of Omaha. It was under his watch that Berkshire became the first non-tech company to blast past a $1 trillion valuation. The scale we're talking about here is just mind-boggling. And you have to understand, his longevity is a huge part of the story. At 94 years old, Buffett isn't just some investing legend. He's been at the helm of this ship for more than 6 decades. I mean, think about that. He's seen entire industries be born and then completely disappear, which gives him a perspective that almost no one else on the planet has. But here's the really interesting part. This incredible success wasn't built on some single, unchanging idea. Nope. The real secret sauce, the genius of it all, lies in a strategy that completely evolved over time. And it all started with something Buffett called cigar butt investing. And this comparison pretty much shows you the entire evolution of their thinking. The early strategy, on the left, was all about finding these discarded cigar butts, right? Struggling companies that you could pick up for next to nothing and get one last profitable puff out of. But the strategy that built the empire, it was the complete opposite. Find a wonderful company, a fortress, a castle, and own it forever. And Buffett himself described it perfectly with this quote. It's scrappy, right? It's all about finding value where nobody else was looking and just squeezing out that last little bit of profit. It's clever, for sure, but it's not a strategy for building an empire. For that, he needed a totally new way of thinking. And that new perspective, it came from his legendary partner and right-hand man, Charlie Munger. It was Munger who really convinced Buffett to pivot, to stop looking for just fair companies at a wonderful price, and to start focusing on something much, much bigger. And this quote? This became the new gospel for Berkshire Hathaway. It's their whole philosophy in a nutshell. Stop digging for bargains in the gutter and start looking for quality on the shelf. This single shift in thinking is what unlocked all of the explosive growth that was to come. Okay, so a great philosophy is one thing. But you need cash, a lot of it, to make it happen. So where did all the money come from? Well, the answer lies in Berkshire's secret weapon, a little something called the insurance float. Let me break it down. The insurance float is basically all the cash that customers pay in premiums that an insurance company just gets to hold on to before it has to pay out any claims. Buffett had this huge realization. If you run your insurance business really well, meaning you take in more money than you pay out, you can invest this massive pile of other people's money for your own profit. It's like getting a giant interest-free loan from the world. Actually, it's even better than that. So back when Berkshire first jumped into the insurance game in the 1960s, their float was a respectable $16 million. That was the seed capital. But Buffett's genius was using that seed money to buy more and more well-run insurance companies. And by repeating that strategy for decades, that float has grown from $16 million to, get this, $171 billion today. I mean, that is an almost unbelievable war chest of cash that they can use to buy those wonderful companies whenever a good opportunity pops up. So, you've got a crystal clear strategy and a massive pile of cash. What did they build with it? Well, they built an empire of brands that you and I interact with all the time, whether we even realize it or not. This timeline really gives you a feel for how they built this thing piece by piece. It started pretty small, back in '72 with See's Candies. That was the test run for the new strategy. Then came the absolute giants, like Gico in '95 and BNSF Railway in 2009. The portfolio is incredibly diverse, but it's all tied together by that one core idea. Buy strong, established brands. Yeah, that See's Candies deal back in '72 was a huge turning point. It was the very first real test of Munger's philosophy, and man, did it teach them about the power of a beloved brand with customers who are just incredibly loyal. It proved the whole wonderful company theory actually worked in the real world. Geico is another really fascinating one. Get this. Buffett first invested in the company when he was just 20 years old. Decades later, in 1995, Berkshire swooped in and bought the rest of it. That single move cemented them as an insurance titan and just massively grew that all-important investment float. And then you've got something like BNSF Railway. At the time, this was the biggest deal they had ever done. A $34 billion bet on the actual backbone of the American economy, right in the middle of a major downturn. Talk about a bold, long-term move. It showed incredible confidence when most people were running scared. And here's another thing. It's not just about owning companies outright. Berkshire also holds enormous stakes in other giants. They figured out they don't need to control a company to profit from its success. I mean, huge investments in timeless brands like Coca-Cola and modern titans like Apple have made them billions upon billions more. So all of this history, all of this success brings us to the biggest, most important question facing the company today. An empire built by two geniuses is one thing, but what happens when those geniuses are no longer around? And look, this isn't some theoretical question for the distant future. This is happening now. Warren Buffett is 94 years old and has already named his successor. And his lifelong partner, Charlie Munger, passed away in 2023 at the age of 99. The two architects of this entire empire, they won't be running the show anymore.
And that leaves us with one final massive question. Was the success all about the two men who built it? Or is the culture, the strategy, the very DNA they created strong enough to carry on without them? It is the ultimate test for Berkshire Hathaway, and it's a question the entire investing world is watching. Can an empire truly outlive its creator?